So, good evening, everyone, and thank you for joining us today on the ABCs of HOAs. So, I'm going to start out before if you've been to my seminars before, you know I like to start out with a market update, and I will be doing that today. I'm going to go briefly over it, maybe about 5-10 minutes, and then launch right into the HOAs. So with the median sale price, I usually will do this on just single family homes. This time, this is for, and it's always for San Mateo County, although we can stretch it out further. But for this is usually I will talk about for single family homes. Today, I'm doing a mix of single family homes as well as condos, just as a comparison. So median sale price is that number at which you have the same number of homes selling above that price as you do selling below it. When you look at median sale price for San Mateo County single family homes, that's on the left side here, you can see, and this goes all the way back to 2010, an upward trajectory. So, of course, over the course of the year, you get the ups and the downs. About 2/3 of the way through, this is where we had COVID happen. The prices shot up pretty high soon after that, and then we hit an all-time high of 2.25 million. This was in April of 2022. Then, as many of you have heard, the interest rates started to jump up over the course of the middle of 2022, and so we did have a little bit of that dip and going up and down. In 2022, we actually broke that $2 million barrier. Actually broke 4 times, and then in 2024, also 4 times. We did hit actually a more all-time high in 2024 in May, and that's 2.3 million. So if you consider that, that's pretty amazing, right? And then for January and February of this year, we've seen it dip down a little bit. So January it was at 1.8 million, which is still pretty good for if you consider January's in the past. And then as of February, and it doesn't show up here very well, but as of February, the median sale price for single family homes was at 2,095,000. So we actually beat the $2 million barrier. And you can actually see just in the field that prices for single family homes are starting as we get into our March and April, May, the spring selling market. We are hearing a lot of competition going on out there. I thought it would be good for the purpose of this, because we're talking about HOAs, to compare that with condos. So you see that from the 2010, it looks very similar. Of course, the prices are lower to start. So we're looking more around, in 2010, we're looking more around the 300,000 range. And that has steadily or very quickly went up over the course of time until about 2018. At that point, there was a um, increase up to over 800, so about 8 to 900,000. And then you can see that it's almost plateaued. So you've had some peaks, you have some valleys, but it's plateaued around the $800,000 mark. And so that is a very different look from the single family homes where it's with the peaks and the valleys and all of that, you can almost draw a straight line going up. With the condos, it's actually went up quite a bit over the course of, 2010 to 2018 or so, and then it jumped up and then it's just kind of stayed there. A lot of that has to do with also COVID. So what we'd normally see in terms of, continuing to go upward, we've actually saw the condo market get impacted by COVID as people didn't want to live in communal living. A lot of the people who would live in condos went out of the area because they could work remotely. And then especially, so even in San Mateo County, we've seen the condo market somewhat plateaued. In San Francisco, it's actually worse, where you've seen some cases where the prices have come down in San Francisco and has not really recovered since the pandemic. The next one that I like to show is months of inventory. So what this has to do with is that if you were to take all of the inventory that's on the market and the houses that are on the market and don't add any new ones, how long would it take you to sell out to run out of inventory? And in general, the way that we've thought about this is that if you have 6 months of inventory, then that represents a balanced market. If you go higher than that, that means you have a lot more inventory, then that's more of a buyer's market because there's a lot to choose from. If you go lower than that, there's not enough inventory, it's traditionally known as a seller's market. And you can see that here For single family homes, it's pretty much stayed around the 2 month mark. So the 2 month mark here, and even going into 2015, excuse me, 2015 to 2018, we saw it dip down to the 1 month mark, and it bumped up a little bit after that, and especially with COVID, and then it's jumped down to again the 1 month and below mark in 2020, 2021, and 2022, hence the higher prices during that time period. And then it went up again to more around the 2 month mark. So for January and February of 2025, we're more around the 2 month. This graph is actually off a little bit, but it was actually more around the 2 month mark that we're staying. And so following that, we can say pretty much since 2012, although we've had some ups and downs, overall it has maintained, it has continued to be a solid seller's market. For the condos, you see it kind of similar here, but the scale is different. So the high in for the single family homes is more around 6 months. For these condos, the highs here have been more around the 8 months. So remember, I said it's been 6 months is considered more of a balanced market. And so what you see here is in the 20 early, 2010 to 2012, you can see that it's more around the 6 month mark. And then we get down to, in that 2012 through 20, and beyond, more around the 2 month mark that it's been hovering. But it actually has gone up over time. So over the last year, we've been hovering more around the 3 month, close to 4 month mark. And then again, this chart for some reason is off, but for January, it was at 4.1 months of inventory. For February, 5 months of inventory. So we're seeing it getting closer to that, what's considered a balanced market. We're seeing more inventory, more condos that are staying on the market longer. And I'm going to talk about that a little bit as we go into this further into this seminar. Median days to sell. So this is counting from the time that you go on the market until the time you actually have an offer accepted. How long does that take? And so for single family homes, you can see that the median days to sell, it was pretty high. This is right after the last recession, so 2010 to 12. Again, that was, you would see, it could take as long as 40 to 50 days to sell. And then since then, it's hovered mostly around between the 10 and 20-day mark. This dip that we see here is just because during the early days of the pandemic, the multiple listing service actually decided to pause counting days on market, because even if a house was on market, we couldn't show it, we couldn't do open houses, and so it didn't seem fair to count that as a day on market. But you can see here that it's pretty much hovered between the 10 and 20-day mark. Some of these higher ones, which is usually December or January, that we saw it go up, but pretty much over the last year, it stayed again between anywhere from 8 to 18 days at the most. With the condos, you're seeing similar pattern, but now this first line here is actually at the 20-day mark. And so we've seen that staying a little under 20 days and then going up again. And over the last year, so in January, we actually saw it at 40 days on market. So, and over the last year, it's been somewhere closer to 18, between 18 to as much as 45 or 48 days. And in January, it was at 40 days. So we're seeing the condos, they do generally take longer to sell. At times when for my single family home listings, I'll generally think of it more like I might have one weekend of open houses. I might have two, which is 10 to 18 days, right, on market, as opposed to the condos where sometimes you can get them to sell quickly. I have a listing that just sold in about 8 days. And in other cases, you're looking at, about 20 days, 30 days or more. So I found it interesting because on the condos, when I have a condo listing, if it doesn't sell right away, especially in this still limited inventory market, somehow when we get to about the 21-day mark, then the interest starts picking up again. And I haven't quite figured out exactly why it does that with condos, but that's just something that experientially we've seen. And then the last piece of data I wanted to introduce is the interest rates, because that's one that has been always a factor for us in terms of what is happening with the market, especially you can see here this is the 2018, 2020, 2019 and 2020, we had that dip where many people here probably refinanced because we're looking at interest rates in the 2 to 3% range. That in 2022, within the middle of 2022 started jumping up. And so we were getting up to interest rates in close to sevens and eights. And that started to depress the market. That's been kind of an on again, off again thing with the interest rates. As of last week, it was at 6.65% for this 30-year average 30-year fixed rate mortgage. And so 6.65, it's not as good as we would like it. And many economists have considered the sweet spot of interest rates to be about 5.5. And that's the point at which you get more buyers out there. But this is what we were seeing. And I think what we're seeing in general is that sellers who are waiting, sellers who were feeling like they're kind of locked in because, hey, I have a 2.5 or 3% interest rate, if I sell and buy something else, then I'm going to be paying more, right? I'm going to look at more of a 6 or 7% interest rate. So we had sellers who were locked in. That effect is starting to loosen up a little bit, and we're starting to see more inventory just because people who need to sell don't just sell because of interest rates, right? We have other things, other needs for that. And then the buyers as well are starting to get to where they're not as concerned. Or, they're thinking, well, it's not going to come down to 3% anytime soon, maybe not ever for a long time. And so I just need to, if I'm going to buy, I need to buy and find the one that I like. When the interest rates come down, then we can go ahead and refinance. So that's what we're seeing still. Interest rates is keeping and is keeping a lot of it does impact our real estate market quite a bit, but I think the impact of it is starting to loosen up a little bit, just as people get used to seeing the interest rates in the 6% range. All the economists are a little bit mixed in terms of what they're expecting to happen, but for the most part, what I've been hearing is that we're expecting not a lot of change over the course of the year. There are a lot of different opinions in terms of what will happen with our economy as a whole. And so we'll continue to watch that interest rates and the economy to see what happens in the year during the coming year. So I'm going to go ahead and launch into the ABCs of HOAs. Disclaimer, this seminar is being presented with the intent of providing information to our clients and neighbors. It is not meant to be construed as specific advice. I am not an attorney, so please be sure to consult your attorney or a tax specialist before you make any decisions. I did want to put a personal disclaimer out there as well, because I do serve on my own HOA board. I am not an attorney. I'm not a tax person. I'm going to be presenting this from the perspective of someone who's been in the real estate business and helped to buy and sell a lot of condos and townhomes, and even single family homes with an HOA. And so I will be presenting it from that perspective. But if you do have any legal questions, you do need to talk to an attorney. I know our attorney who's been helping me with our board, my own HOA board. I believe he was going to be joining us this evening. So if anything comes up, I might be talking to him as well. But I just wanted to make sure that this will be more of an overview and providing information, and is definitely not meant to be any kind of a legal advice for anyone. So with that, considering HOAs, I'm just going to launch right in. What is an HOA before I start anything else? HOA stands for Homeowner Association. There can be homeowner associations for condos, for townhomes, and even for single family homes. So obviously with the single family homes, it's going to be more, the association will probably be less involved, but it may be more of a planned unit development, a community where they have a swimming pool, a recreation center. And so the dues for that will be more minimal. Sometimes they'll have sometimes they'll street maintenance. Sometimes they will have guidelines for what you can paint your house, in exterior, that kind of a thing. So there can be HOAs for single family homes as well. For the purposes of this discussion, I'm going to be talking more about condos and some amount of townhomes. So just to keep that in mind, a condo ownership that basically, just to make it, to simplify it, it's basically where owners own their individual units, so the interior of your unit, and then they share a percentage of the common land, the buildings, and amenities. So you'll find that in the CCNRs where it'll actually talk about how this whole condominium was set up and how much, how much does each person own exclusively and how much of the percentage do they own of everything else of the common areas. A question that comes up, and I think it's interesting to note, is what category does townhome belong to? Because there is actually no such thing as a townhome ownership. So if you go to sell a property, people will look up what's called a preliminary title report, and that title report will show what kind of ownership is of a certain unit or building, a parcel. And in there, there is such a thing as condo ownership, condominium ownership, because they'll talk about, and in there it'll say, basically what do you own and what percentage do you have, what are the CC&Rs, et cetera, which I'll talk about. And then there's also just simple ownership that you have, which is usually for the single family homes. There is actually no category called townhome. So there can be a townhome, more refers to a type of home. So you can have that double two level. So you can have a two-level condo, or you can have a two-level single family that's kind of close to others or attached to others. So it more has to do with the style. Really, how you know if it's a condo ownership or single family ownership is going to be from the title report. So a lot of times I'll see on even on our multiple listing service, sometimes you'll see things that are categorized and it's not always accurate because it just has to do with what the agent understands, what the real estate agent understands and enters into the MLS. But sometimes you'll find a whole mix of things, especially I know Redwood City, Foster City, Redwood Shores especially has a lot of townhomes, but some of them are single family actually, and some of them are condo ownership. So the way that you can tell that is to, again, you'll have to look at the title report to be able to really make sure what you're doing. So with the HOA fees, generally you're going to have HOA fees that are collected with an HOA. What's commonly included in there are things like the utilities, so your water, cold and hot, sometimes those are separated out, trash, sewer, gas, etc. It's not a guarantee, so always important to ask to find out, and that's going to be shows up in your documents as well, who covers what. Common area maintenance, so if there are buildings, if there's a pool, any other amenities that I mentioned here, landscaping, etc., that will be generally maintained with using the fees from HOA dues. Property management. So if you have professional property management, the smaller HOAs may not have professionally property management, but the larger ones generally do. And so the HOA dues will pay for that. They'll also include the building and common area insurance. So each individual unit owner needs to purchase insurance, but it would only be for the interior of their unit. Otherwise, the HOA generally would have insurance that is that covers the building, the exterior, and the common areas. It also includes a set aside for reserves, which is very important and which I'll go into later. And then less common, but sometimes can happen are things like cable TV or earthquake insurance. That is usually not as common, but sometimes you'll see that with the HOA dues. Benefits of HOA insurance ownership. So the benefits of HOA ownership, we have less maintenance issues, especially with landscaping and the building exterior. So in general, HOAs are going to be responsible for taking care of the main part of the building, right? And so as an owner, as an individual owner, you don't need to worry about that so much. And so an example is, when we go to sell, we don't always do a termite inspection because the termite inspection more has to do with the exterior of the building. Is there leaking going on in the crawl space, or is there, how's the roof going, et cetera? That is mostly going to be taken care of by the HOA, by the homeowner association. So that will be less so for a less, so there are less concerns in terms of what an owner needs to worry about individually. It may be easier because of that. It may be easier for first-time buyers or those who are on the go, those people who want to travel a lot or who don't want to spend your weekends maintaining, going out and working on the garden or the fence or doing all of that. So that may be easier, and that's where it's also because the prices are a little lower, it may be more accessible for people. Community living. So I think that could be a real benefit of living in an HOA because there is a sense of safety in numbers, right? And so you actually know all of the time, a lot of the time you can know your neighbors and you can, I live in a condo, and so when I'm away, my neighbors pick up packages for me, and keep them in a safe place. So there's some safety in that. And then you do have shared costs that are that come up because of the HOA dues. Just to think about that a little bit, I know there are some people who are like, when they're considering buying, they go, oh, there are HOA dues. The thing is, those are not just going into a vacuum and they're not going to pay the board. What they're actually going to is some of the costs that you would have to pay anyway if you were to live in a single family home. So as an example, and these costs are going to fluctuate depending on usage, depending on inflation. A lot of these have gone up. Water, you can spend as much as $100 or $200 per month or more based on how much you use. Trash, somewhere around $50 a month. Possibly landscaping. I know we've managed some homes, 125, 150 a month to take care of landscaping. Insurance, you have, over $1,000 per year for a single family home. Lately, it's gone up even more so, but that's what we're seeing versus an HO6 insurance. It's called Walls In policy, which for if you're living in a condo, you would only need to buy insurance for in the interior, as I mentioned before, and that tends to be a little bit cheaper or significantly cheaper. And then you have the large scale repairs, such as a roof, which for a single family home, you're looking at anywhere from 30 to 40,000. If you get a really good estimate, maybe you can get away with about 20 to 25,000. And if it's a big roof, you're dealing with about, 50,000 or more. And so these are costs that, your HOA dues are hopefully being able to help cover and offset so that we're not paying this amount. And so the drawbacks of HOA ownership, you have no control over how much those fees will increase each year. You have minimal control over how the money is spent or how the common areas are maintained. And so I mentioned one of the benefits is you don't have to worry about it so much doing it. The drawback is that you don't have to worry about it, but you also don't have much control over it, right? And so there can be a little bit of a frustration there. The HOA dues are not tax deductible. And then the other drawback is community living, which I mentioned as a benefit. So it could be a benefit because there's safety in numbers, you get to know your neighbors, et cetera. But also you are going to be living in close quarters with your neighbors. And so there could be noise issues, smells, any issues with neighbors that you may have. It's something that you have to get used to and understand if you're going to live in a condo. So HOA documents are very important when you go to purchase a condo or sell a condo. You will get a thick stack of documents. And I think a lot of the times people tend to gloss over those because there are just so many and you're already dealing with the transaction and whatever. But these are really, really important. And so I'm going to be going into those in terms of what to look out for. What does that HOA document package consist of? So first we have the articles of incorporation and then you have the bylaws. So articles of incorporation are the simplest one because that's basically showing you how this association was incorporated, right? And so that's pretty easy, not much to look at. The bylaws tell you how it was set up. So how is it governed and what are the election rules and things like that. Generally, you'll find in the bylaws. Covenants, codes, and restrictions, which many people hear of as CC&Rs. I like to break down acronyms whenever I can because I think that can get confusing for people if you just start throwing them around, right? So CC&Rs are the covenants, codes, and restrictions. These are one of the thicker packets that you'll get. is this file, but it is also very important because it talks about all of the different things, the different restrictions and responsibilities. So going into that, what do we see in the CCNRs? It designates your homeowner versus the HOA responsibility. So the balconies, who owns that? Who's supposed to maintain it? The windows, the doors, the plumbing, etc. So the CCNRs actually talk about that. It goes into detail in terms of what the maintenance and responsibilities are. Another thing that they talk about is a percentage ownership for each unit. As I mentioned, everybody has their own unit, but you also have a percentage of the common area of the common building. In general, because of that, you'll see because there's a higher percentage responsibility, and a lot of times this is based on your square footage. So the two-bedroom units that have 1,000+ square feet are going to generally pay more than someone who's in a one-bedroom unit that's maybe 500 or 600 square feet. They will pay more, but they also own more of the common area. And so that will be defined out in the CCNRs. They will talk about regular and special assessments and the process for all of that and how that's determined and what the board's supposed to do every year. Parking and storage information, rental restrictions, if there are any, and then any other limitations on usage, things like rentals, things like mortgages. What happens if an owner doesn't pay, and what can the association do if an owner is behind in their payments? So there's a lot of stuff that's in the CCNRs. I know people tend to gloss over them, but they're very, very important. And this is just some of the information in the CCNRs. They can differ or they do differ very much from association to association. Sometimes you'll find that some HOAs have CCNRs that date back to when they were incorporated. So the 60s, 70s, especially, you'll see a lot of older CCNRs in there. And it's important for the HOAs to update them, you know, I don't know how regularly, but to update them and make sure that people understand what's in them. So one of the big issues that you'll see is about in the CCNRs has to do with your HOA's policy regarding plumbing issues. This is actually very important because a lot of times you'll have the stacks. If you have a multi-level condominium, you'll see that there are stacks where they're basically units stacked on top of each other. And then when they have plumbing issues, sometimes they will, like for my HOA, we actually say if there's a plumbing issue within your stack, it may have to be something where if that the owners of that stack all have to share in that cost. In other cases, you may have it where it doesn't matter. As long as it's a shared issue, then it's going to be the HOA that takes care of it. All of that is going to be found, or most of that is going to be found in your CCNRs. But it's really important if you do have any plumbing issues, to fix it and then deal with it later. Things, again, like roof leaks and window leaks, those are things that can be issued, that may be covered as well. And it's interesting because I always say, like I'm in a 3-level building. If you're on the first floor ones tend to have more of the plumbing, get the brunt of plumbing problems. If you're on the 3rd floor, you get the brunt of the any roof issues. If you're on the middle floor, then you have to deal with noise above and below you, right? So that you have to worry about noise for the people below you. You have to worry about noise from the people above. So, there are different issues there. But in any case, plumbing issues are something that is very common. You'll see in the CCNRs what's covered and what's not. So going back to the HOA documents, as I mentioned, these two, and then the third is financials that you'll find in HOA documents. Though you should find a budget, and if you are already own an condominium, if you already own a condo, you're supposed to be getting a budget, a financial statement every year. So make sure that you're getting those and take a look at them. There are times when I actually am helping to buy a condo and we request the HOA documents, and I'll get a budget that is 3 years old. And I go, I'm sure you have a budget that's newer than that, right? And so it's really important that you do have an updated budget, that you have an updated financial statement, and then a reserve study, which I'll go into in further detail. But that's really important to have these 3 pieces of information because that will impact a lot of what happens to you. So with that, just stopping with that, the reserve study, again, there is a requirement that they do a reserve study generally you're supposed to do an on-site reserve study every 3 years and then do an updated, doesn't have to be on-site. So they don't have to come out and actually look at the property, but it's recommended to do that every year. And what the reserve study does is this is a third party company will come out and they'll say, what are all of the things, the capital, what is every aspect of the building that will need to be maintained over the next 30 years? What is that number that you need to be healthy, to have saved up for? And then you take a percentage of what do we have now, and what is that percentage? And so what they'll do here, as you can see on here, they'll tell you, okay, here's, if you're below 30%, then they say it's high, and I'll go into what that means. If it's between 30 and 70%, you're medium in terms of your strength. And then if you're higher than 70, it's strong. And if you're higher than, even higher than that, obviously you're in good shape. So what this percentage does is actually tell you, okay, here is as an example here, if currently fully funded reserve balance, to be fully funded, and this is an example, I'm not going to point out which, it's not my association, but if here's a fully funded, in order to be fully funded, you need to have $317,000 for everything that's going to come up within the next 30 years. And then they calculate out again, what do you have? So it's about 136,000. So this one here is at a reserve strength of 43%. So when you get your reserve study, there's a lot of information, but if you look for a chart that looks like this, it'll give you that summary. And what that does is tell you, okay, where are we at? Are we poor? Are we fair, strong, or above? And then down here, although it's blocked out here, it's basically tells you what is the risk of a special assessment. Why is that important? Because if you are low, if you don't have very good reserves and something comes up, even though they said it's projected over the next 30 years, what if all of a sudden you need to fix your roof and you don't have that money, right? So there is more of a risk. If you're poor in your reserve strength, there is a higher risk that you're going to have a special assessment in the near future. So that's important to look at. And again, the budget, you'll have a detail in terms of what they're budgeting, how, are they, do the costs seem pretty much in line, and are there enough reserves being set aside? So here you can see for this one, the monthly contribution rate, what they're recommending is that you have an extra $600, right, for a monthly contribution rate for this association in particular. So, so this is what they're doing, and it's important to look at that when you get your HOA documents. Going back, then rules and regulations, these are also very, very important to look at. And when I'm helping a buyer assess an HOA, I will go through it and I'll point out some of the important things. But I always say it's important for you to always look into it as well, right? Especially when it comes to rules and regulations, because those will impact how you live, your lifestyle, right? And so that can be, that can be a huge thing. And sometimes there are things that I can say in terms of these are the big pieces to be aware of. But sometimes in there, in the rules and regulations, you can be like, well, I really care about having a satellite dish on my balcony. That's important to me, right? And so those kinds of things will come up in the rules and regulations. So again, important to look through those. Some of the examples of what are in the rules and regulations are rental restrictions. That's a big one. Sometimes you'll see those, or they should be also in your CC&Rs if there are rental restrictions, but they will come up again generally within the rules and regulations in case you don't want to filter through the CC&Rs. Pet restrictions, those often come up also sometimes in the CC&Rs, but also in your in the uh, in the rules and regulations, and that's very important. I'm finding increasingly we have more and more people who do have pets and who feel their pets are like family, and so if they're not going to be able to, have their pets in, with them, they're just not going to buy, right? Or they're not going to rent a condo. So important to know that. So architectural guidelines, basically that has to do with what can you do with your unit. So can you remodel things like flooring? Can you many times for the second and third floors, you can't put hard surface flooring because of sound. And so you have to put carpet, or at least in the bedrooms. So things like that, or if you're going to remodel, what do you need to do? What kind of permission do you need to get from the HOA board, that kind of a thing. Common area amenities, so things like a pool, a recreation room, what are the rules concerning that, concerning the usage of those common area amenities? Parking, balconies, and storage. So it'll talk about parking, what you can keep in the garage or not. What can you keep in the balconies? A lot of times balconies, the HOAs will tell you that they don't want you to dry clothes outside or, different things like that, so that, and put storage there because you care about the look of the outside. If we want it to be able to be consistent or to look clean, that kind of a thing. Moving rules as well. There may be, sometimes you'll find there are some rules specific, especially if you have an elevator and they need to have the walls covered if somebody's moving, that kind of a thing may happen. And then marketing specific, sometimes you'll find those as well in terms of what kind of signs can be placed outside. And that's important if you're going to sell, that the agent understands what kind of sign can they put outside? Can you put a sign at all? I've had some condos where they will not let you put a yard sign at all. You can put a sign in the window, but the window is not facing it's facing the inside, so nobody's going to see it anyway. So those are things that are important to understand. Rental restrictions, so just to kind of go back to that, there can be rental restrictions that are placed, and those have to do with, many times it'll be a majority, if there are rental restrictions, will have to do with the number of rentals you can have. And so just to go into California Civil Code 4741, as of 2021, it basically says any restrictions capping the number of rentals to less than 25% are no longer permitted. So I know one association in the area has a 20% cap on the number of rentals. So if you have 100 units, you can have no more than 20%. And that is no longer permitted. So if that's the case, then it actually has to be, they have to actually allow at least 25%. And that's kind of an effort to be able to increase the number of rental housing that's available. So you can go higher than that. You can say, so my association, we have a 30% rent cap. You can go higher than that, but you can't go less than that. And that was effective in 2021. The other thing that besides number of rentals could be terms of the rental that there could be restrictions on. So many HOAs will actually have a clause restricting short-term rentals. So anything 30 days or less, so think Airbnb type of a rental, they don't want to have, and part of the rationale for that is that you just don't want strangers coming in and out, right? And so you want to be able to have more of a long-term rent. So that's a pretty common one that you'll see. Sometimes you'll see where they don't care about how many rentals you have. You just can't do so they won't restrict it by number of units that are rented out, but they will restrict it to longer term, 30 days or more. And then minimum or more maximum lease terms. Sometimes you'll see that. Sometimes you'll see occupancy limits, which are oftentimes, if they'll be based on the California Department of Fair Employment and Housing restriction, which is that 2+1. Sometimes people say HUD restriction as well. So 2 per bedroom plus 1. So if you have a 1 bedroom, you can have up to 3 people, right? 2 for the 1 bedroom plus 1. So you can have up to 3 people in a 1 bedroom unit. So there may be that as well included in a rental restriction. And then here, I'm not going to, the same code that became effective in 2021, owners can create valid rental agreements lasting 31 days or longer. So if there is a restriction that says you have to have at least 6 months, if that is the restriction of an HOA, technically they're supposed to be able to allow you as long as you have 31 days or longer. So they can't restrict you in that sense. And then an owner who lives in a unit is allowed to rent out part of the property, and that doesn't count. So if somebody is living in a 2 bedroom and they're maybe renting out one of the rooms to their, they have a roommate, that doesn't count as part of the rent cap. So that was made more clear. And again, I'm not an attorney, so if you have an issue with this, please talk to an attorney about it. But I'm just letting you know that's what's in the code. So other rental restrictions, there may be an initial owner occupancy period. So for instance, Shelter Creek, that's over in San Bruno, has a 2-year waiting period before you can rent out. There is, and there are other places that may have that as well. There may be some rules about what's the waiting list procedure. So if you purchase for now and then you know that you're going to want to rent in the future, what is that procedure? Do I have to wait a certain period of time? Is there a waiting list, etc.? And then there are some lease requirements that may or may not be in effect in terms of what they want to see on a lease. That is less common, but you may see that as well. Rent restrictions, are they good or bad? So I think they can be both good and bad. There's a reason for the restrictions out there. Part of that has to do with this idea that if you have residents who care about the unit and the complex, you probably have less problems. And so if you have more people more owners who are living there, they have more sense of ownership, obviously, and they care more about the complex. And so you're going to have less issues. That's kind of the thought process. I was a renter. I think I was a good renter when I was a good renter. So there are a lot of great tenants out there. Unfortunately, like even for my HOA, we've had issues where a lot of the issues that come up, whether it be security or otherwise following the rules, a lot of them tend to be more of the tenants out there, more so than the owners who are living there longer term. So there's that. There are lender restrictions. Lenders often when you're going to sell, they actually will ask you how many um, how many units are owner occupied versus rented out. And so if it's too high, there are some lenders that will balk at that. It can, on the other hand, the rental restrictions can impact your resale value because it's not good for the investor buyers. So if you have condos and you're trying to sell a condo, and you basically and you have a rental restriction, you're basically limiting the number of potential buyers because those investors out there who are looking for investment opportunities are going to automatically just be, not included in that. And then you have, rental restrictions. Life happens and needs may change. So I've had multiple clients and this actually happened to my daughter, who bought a condo and, thinking, I'm not going to need to rent it out. I'm buying it to live in. But then things change in terms of life, in terms of, also my daughter's situation, job situation, people are getting married, all of that needs may change. And so then if that happens, now you can't rent it out. And so you have no choice but to sell. And I'm experiencing a lot of people now, as I mentioned, the condo market has somewhat plateaued over the last few years. And so I'm actually seeing people who bought only 2 or 3 years ago, life happens. And so they need to change. And they're looking at possibly a loss or at least maybe at the best breaking even. So the rental restrictions can actually hurt you if you do need to move out and you don't have the ability to be able to rent out the condo and keep it until the market gets better. Um, so going on to common pet restrictions, they may be limited to one or two pets. They may be limited by type of pet. So sometimes you'll see in the rules a common household pet. So you can't have an alligator or a goat or something, right? So it has to be a common household pet, or there may be a restriction on the type of pet. So sometimes you'll see dogs, there are certain limitations in terms of the breed of dog. The size, so usually it'll be by weight, so they'll say under 25 pounds as an example. Or there may be actually a registration process, so they may request information on pets, including vaccinations, et cetera. So that's something that you may see in the rules. Service animals, so I know I'm getting kind of short on time already, but any dog that's individually trained, any animal that's individually trained to do work or perform tasks for the benefit of an individual with a disability, including physical, sensory, psychiatric, intellectual, or other mental disability. There are service animals. That's the definition basically of a service animal that we have there. And training is required. There's a certification that can be provided, but is not required. These service animals are exempt from any pet restrictions. So even though there are pet rules, you cannot, if they say you're limited or they're not allowing any pets, service animals are not included in that because they're not considered pets, right? And so they do need to follow pet rules. So common pet rules like having a leash in possibly common areas, cleaning up, aggressiveness, et cetera, because you are living in a community. There does have to be some amount of reason reason. And when in a public place, they need to be properly secured, but you cannot limit them. And that's the rules and regulations do not otherwise apply. With emotional support animals as well, this is coming up a lot. They are not considered service animals, so they do not help a disabled person with daily living activities, but they are also not considered pets. And so they can be, the emotional support animals are generally going to be prescribed to help alleviate a person's depression or other psychiatric disabilities. There is no training or certification required. If somebody does ask for one, you can go online, actually buy one, I think for like $25, $30. So, but they are also exempt from pet restrictions, must follow pet rules, must be harnessed, leashed or tethered in public places, etc. So there is some amount of reasonableness that needs to happen, but they can be exempt from all of these. The architectural guidelines, so that in general, if you have general maintenance or repairs, that doesn't need to have approval. Again, I would check with your HOA documents. But any layout changes, for instance, breaking down the walls, those are going to be generally harder to do. Flooring, there may be restrictions in terms of hard surface floorings, especially again for second floors and above. And when in doubt, you really should ask. So in many cases, they say like for like. So if you're just changing out the kitchen countertops, if you're painting, anything that you're doing, that you're just kind of changing things up or repairs, you don't necessarily have to ask in many cases, but it's really important to ask. And I always like to let people will ask me because I'm on my board. I always tell them, if you just let us know what you're doing, that will be helpful, right? Because if we start seeing a bunch of materials coming in and out and whatnot, people get nervous. So it's just good to check in and make sure to ask your HOA, what can I do or can't do. A lot of times these will have they will include allowed hours of construction, because again, you are living with other people around, coordination of elevators for moving furniture in and out. Licensed contractors may be required, especially for anything dealing with electrical or plumbing items. I actually had a listing where after we sold it, the buyers had a plumber do some work, and the plumber caused a fire. So very important. That's why it's important to have a licensed contractor do the work as much as possible. Um, Thankfully, that wasn't my client's problem, but I did hear about it later that happened. Plumbing, you need to be aware if the building will need water shut off, because that's something that happens actually in my building, because some of the condos were built as apartment buildings and did not have their own individual meters or shutoffs. And so if you're going to have work done, you may need to have the whole building shut off. So it's good to know that. Disposable old materials, so we'll have that guideline as well. So going on with that, there are board meeting, other documents that you'll see in there are the board meeting minutes, which will have, generally it's required the last 12 months. Newsletters, if any, not all associations have newsletters, but if they do, the last 12 months, and then master insurance for the HOA. So insurance consideration, there is a master policy coverage, which has to do with the whole building and the common areas. It's really important to have property replacement coverage. Insurance costs are increasing significantly. And this is just across the board, what is happening even for single family homes, but it is also impacting the HOAs out there. And so I'm hearing of costs for my own HOA from year to year, last year to this year, we had a 30% increase in insurance costs. I'm hearing of others where, especially if they had a claim, they're doubling in terms of their insurance costs. And how does that get paid for? It really, in some cases, it does lead to HOA dues being increased. And then, of course, there's also the individual unit insurance that is necessary. That tends to not increase quite as quickly, but I think as a whole, insurance has become an issue in California. So common red flags as you're going through all of these, signs of deferred maintenance. So this is why it's good to have the minutes, the last year's worth of meeting minutes, because sometimes you'll find things in there and they'll be talking about leaks that are coming up or the balconies, special assessments, et cetera. So it's really important to kind of be aware of any deferred maintenance that may be going pending litigation. So that may be an issue, may cause issues with a lender if there's any litigation that's going on, whether it be that the association is suing somebody else or they're being sued, it's important to know what the litigation is about. But having that is important. Having that information is very important. Special assessments, and I'm going to go into that in more detail, but that's something to be aware of. Delinquency ratio. So how many owners are delinquent on their HOA dues? And that is important because that tells you about the health of the finances, right? And so banks will ask for this when you're selling a condo. The banks, if there's a bank involved, they're going to want to know how many delinquencies do you have in your association. And so I had actually some years back a situation where we were one unit over the 15% that the bank wanted at the time. So 50%, the bank did not want more than 50% of the units delinquent. And we had actually one unit over that. And so I'm like, I'm gonna go pay off your dues. I mean, it was literally like that. And so it's a good thing to just kind of keep track of. Percentage of rentals, as I mentioned, the lenders generally don't like, there's no set on that, but if you're seeing something over 50% having rentals, it's a little bit like something to be aware of. And insufficient reserves, so that goes back to the reserve study. And then master insurance, so these blanket policies are, in order to keep the cost down of insurance, some associations have gone out and gotten policies where this policy will cover multiple associations, different associations. The banks tend to not like that. So that's something to watch out for as well. So special assessments, and this is a huge topic, but I'm going to try to get through it pretty quickly. I also already mentioned, how to look at that, right? So you have a reserve study that's done, hopefully, ideally every 3 years. That you have an on-site one where they come and they look at it and they calculate. The reserve study is actually very long. They'll calculate all of the components of the building, and then they tell you how much you're going to need for the reserves, and then they calculate how much do you have, and then they evaluate you here. Um, so, so this goes back to the special, and so this reserve study is connected to the special assessment, as I mentioned, because if it's poor, your reserve fund strength is poor, then your risk of a special assessment is high. So sometimes I'll have people ask me, so what's the percent that's good? It's like 100% is good. Anything over 100 is great, right? The higher you can be, the better. The lower you are, does that mean you shouldn't buy? Not necessarily. It just means that you have to be aware of the fact that if something comes up, you might have to pony up, you might have to come in with some extra money, right, to make up that deficit. So if all the windows, if all the, I'm sorry, if the roof needs to be repaired, if all the balconies need to be repaired, right? If you don't have enough reserves to take care of it, then where's that money going to come from? It's going to come from the special assessment. So why are special assessments things that are considered? One reason could be to strengthen the reserves, and inflationary costs have really bumped it up. So our reserve study, like for instance, for my association, it's public knowledge, so I don't have to. It's not. I'm not sharing anything not anything confidential. Our association last year or the previous year, the reserve study said we need 1.6 million to be considered 100% funded. Last year, the next study said we need 1.8 million. Even though we didn't do anything, that 100% mark has changed from 1.6 to 1.8 million, right? And why is that? It's because inflation has played a major part. And so what you consider as that 100% grade is actually that goalpost is being moved up, right? And then on top of that, insurance has gone up as well. And so the amount that an association is able to put aside for reserves may be lower than what they had planned for because of the insurance costs. Balcony repairs and upgrades, and I'll talk a little bit more about balconies, but that's been a major one for associations throughout California and throughout in our area. So I've actually heard of some associations that have had to do as high as 70 or 80%. I'm sorry, 70 or $80,000 a special assessment because the need to redo their balconies completely. Infrastructure, so roof, the plumbing, water heaters, elevators, landscaping, all of that costs money. And so if there is a need to replace or to repair any of these, that can, that can really cause a big dent into your reserves. And so that may be called for a special assessment. Exterior maintenance, again, if you need to do major painting or repair redoing the whole siding or something, right? Water damage or mold issues, they're not necessarily coming out of the reserves because those are more going to be what you're doing in your operating account. But what will happen is that that will start, you're going to have to kind of start, maybe if it's big enough, you're going to actually have to pull from the reserves to be able to cover that, right? And so in all of those cases, this is why there may be a need for what's called a special assessment. The process of it by statute, and there's a civil code here for those of you who are interested. HOA boards are allowed to actually do a special assessment of the membership of up to 5% of a current year's fiscal budgeted gross expenses. Okay, so that's a lot of words in there, but you'll see it on the screen. They can do that up to 5% without membership approval. So it's kind of an emergency special assessment. So even if there are other requirements by statute, it's allowed to have that 5%. And a lot of the HOA documents, CCNRs, especially more recently, will actually include that in there, that the HOA can do up to 5%. Other than that, if they're going to go higher than that, then they need to have membership approval. And in order to do that, they need to, regardless of what's in the association documents, and that goes back to that civil code, a special assessment can be approved by a majority of the quorum of the membership. So quorum means at least 50%, over 50% of the owners have to vote. And then if you have the quorum, then you just need a majority. So you just need over half to be able to approve a special assessment. So there is a process in place for doing this, but this is and you'll find that in the CCNRs, but this is something that's codified as well. Payment options, so when there is a special assessment, they may be fixed per unit or they may be adjusted based on unit size, and that just depends on what is decided out there. So sometimes they'll say it where if you're in a 2-bedroom or 3-bedroom bigger unit, you're going to pay a little more than the smaller units because your percentage of ownership is higher, so you have a higher burden responsibility as well. Some boards may choose to offer payment options for owners to do one-time payments or to spread it out over multiple years or multiple months. They may offer assistance to those who may have a financial hardship, although the boards need to be very careful about how they do that. So it can be a little bit complicated, but that may sometimes happen. So balcony inspections I'm going to go into. And so the background of that, in 2015, there was a 3rd-story balcony in Berkeley that collapsed, basically pitching students 30 feet to the pavement below, killing 6, injuring 7. There have been other issues, like in Florida, there was that condo collapse. So when this happened in 2015, they actually found that more than 400 balconies and decks in Berkeley needed corrective work. So they were not meant to have all these people on the balconies there. And so there was a code that came out and said, beginning January of 2020, condo is that this came out earlier. Any condo association with a building with 3 or more units need to inspect any elevated load-bearing structures like balconies or stairwells as well. Anything that's supported substantially by wood to determine the physical condition and remaining useful life, as well as the waterproofing systems. So this became a thing if it's elevated and it's actually above 6 feet above the ground, anything that's above that, if there are 3 or more units, it's required to have an inspection done. So exterior elevated elements, these are any components that extend beyond the exterior walls of the building. They have a walking surface, as I mentioned, of more than 6 feet above ground level, designed for human occupancy or use, and is supported in whole or substantially by any wood or wood-based products, which is a lot of our balconies out there. So the requirements are that the associations need to have completed their first inspection before January 1st of this year, and then every 9 years after that. I know that there is some confusion out there because there is also a similar law that's called SB 721 that has to do with apartment buildings that are 3 units or more. Those inspections have to be done every 7 years, but the legislature did extend that deadline to January 1st of 2026. There is some confusion out there, though, and I'm literally been hearing from different people that thought that the condo requirement was also extended to 2026. And as of this time, and with CAR forms and everything else, it's not actually the case. So the condos needed to have had those inspections by January 1st of this year. And the inspections have to be done by a licensed structural engineer or architect. And this is a little different from the apartment buildings. So these are requirements. Who's enforcing it? So far, nobody, but it will start happening over time. All inspection reports must be incorporated into the reserve study and maintained by the association for 2 inspection cycles. And then the balcony elements that will need to have access holes to allow for inspections. They actually, if you don't have holes already, they'll actually drill holes underneath the balconies and then put a scope up there to be able to investigate it. And if built before 1986, it's possible that their exterior may have some asbestos in it as well, so may need asbestos testing, and it can be a very, very costly inspection to be done. And it's been difficult for some associations to get on the books, to get on schedule. So really important to, if the association hasn't had it done, and if there are balconies, and if there is any question that there might be wood-bearing elements, really important to get the bids, schedule it out, test for asbestos, as I mentioned, put in access holes. There's a whole process involved. It's not as easy as just calling an inspector to come out. And so that's important to do. And there are some associations that haven't gotten them done yet. Right now, I haven't heard of any enforcement issues, but if you're thinking about buying a condo or if you own one already, ask about it and make sure that your association has, if they are required to do this, that they have it done or they're getting it scheduled, and that they are understanding what it's going to take. Because once those are done, like I said, I know of some associations where they had the inspections done, they have to completely tear down their balconies and rebuild them, and that you're talking a multi-million-dollar project. And so I've heard of a couple around here that have had 70 to $80,000 special assessment that's assessed, and it can be quite a bit out there. So it is one of the bigger items. Here's an example. This is actually my condo building. Here's an example of them doing that. Going up there, putting the access holes. If you can see my arrow, putting the access holes in, and then they had to after that do the waterproofing. Thankfully, with my association, we were able to get away with just having to do a little bit of dry rot damage and then mostly just waterproofing. So we got away with, I mean, it was still a lot. It was $250,000 worth of work, but that's better than multi-million-dollars. So I'm like, I'm gonna take that. So here I did a little more of a close-up of what those access holes look like. Um, so what happens if you need repairs? Again, HOA reserves have to cover it. Most likely they won't. So if they're not able to cover it, possibly an increase in dues. If it's a lot, then there's a special assessment. There could be also an option of an HOA getting a loan to cover the cost of repairs. There's a complex in Daly City that I know of where they did a combination of some increase in dues, some special assessment, some from the reserves, and then also a loan to cover it. And part of the thinking of that is that, it's kind of spreading out the cost to future owners, right? Because if you just do a special assessment now at one time for 70 or $80,000, and then you're going to sell later, then it feels not as fair because you have the future owners over the years, they're going to benefit from it without having had to pay. Um, Note that if repairs are needed, this may impact financing if you're selling the condo, and that may impact the price at which you can sell. And there are many lenders that will not actually do financing for a condo until the repairs are completely done. So even if you do your inspections and they say, oh, you need to fix this and that, now they want to see that that's been fixed. They want to see that you have enough money to cover it. What's going to happen? Because in financing, you have to think the lenders are basically taking on partial ownership, right, of this unit by loaning you money. And so they want to make sure that it's going to be solid. And if they see that there's a lot of either deferred maintenance or balcony repairs, et cetera, they're going to want to see that that was done, that it was completed before they'll loan any money on it. So in conclusion, and I'm hitting a little over 8 now. So in conclusion of this, if you're thinking about selling, you already own a condo and you're thinking about selling, make sure you know your HOA and be sure to disclose anything you know to all potential buyers. And I think this is really important, whether you're a seller yourself, you have an agent that's helping you, just make sure that you're understanding all of that. I have seen situations where a buyer there's a rental restriction in a condo, and the buyer buys fully intending to use it as an investment property, but nobody informed them what was happening, and they had to turn around and sell right away because they weren't going to be living there. And so, it's really important to disclose all you can to potential buyers. Make sure, I mean, you're required to actually provide certain HOA docs, most of the ones that I mentioned. I think all of the ones that I actually listed, you're required to disclose that. And just in any time you're selling, right, you want to be sure to disclose to all potential buyers anything that you know that could affect the marketability of a property. If you're buying, review the documents. So I know it's a lot, it's a big package. I try to help guide my buyers through, what is, what is in it and what are you supposed to watch out for. But I think it's really important as a buyer, especially the rules and regulations, understanding your responsibilities, understanding the finances and what you're getting into. As I mentioned, if there's a potential, if there's a high risk of a special assessment, does that mean you shouldn't buy? Maybe not. Maybe it's still a good, the otherwise that place fits all of your needs. The location is great, you like the amenities, etc. It fits all of your needs. You can still buy, but you need to make sure to save a little bit, have your own reserves, and be ready. And don't be surprised if there is a special assessment that is done in the next year or so, right? Especially if the reserves are lower. And understand what you can and cannot do, because yes, there will be more restrictions. And for those of you who already own a condo, keep copies of all your documents. You have a right to have all of them, the ones that I listed, right? And if you don't have them, request them, make sure that you have it. I would really highly recommend that you attend the meetings, HOA meetings. Many of them since COVID have gone to the online meetings only. So, at the very least, log in, listen in, right? And make sure you understand what's happening. Read the minutes when they come out. The note about the minutes is that they cannot be published until the next meeting and the board approves them, right? So, and finalizes the minutes. But when they do come out, read the minutes, get involved, understand what's going on with your HOA. A lot of times I'll see people who don't actually keep up with what's going on until all of a sudden there's talk of a special assessment. And then all of a sudden they're interested. And that's difficult when you're, trying to understand what led up to that point, right? If you haven't been paying attention. So I think it's really important to do that. I would just add to that consider serving on your HOA board at least once, if possible. So you better understand the challenges of being on an HOA. My building is over 50 years old now. So there are things where no matter how much, I want to be responsible as a board member, I just, it's endless, right? What needs to happen. And so kind of understanding all of the challenges and the nuances of, different community members, different residents having different needs and issues. I think it can be a real good learning experience. And if you're not going to serve on a board, or even if you are, be kind to your board members as well, remembering that they are volunteers. They're not getting paid anything for it. They're not getting any perks. I'm not getting any perks for being on my board, but I think but they're willing to volunteer and take their time to be able to serve. And so I would really encourage everybody, be kind to your board members. I have some of the residents here who intentionally, well, they'll call me if they have a question or email me because they don't want to bother me when I'm on my way to the car, right, to go off to a meeting or anything like that. But I have other members who are fine, but they'll stop me and so what's going on with this and what's going on with that, and again, your board members are all volunteers, and so I would just put in a personal request that you be kind to them and be involved. Um, just to add on, there is a website that is a publicly accessible website called the Davis Sterling. It's Davis Sterling, sorry, davis-sterling.com. There's a picture of it on your screen here. And this is a really good resource. So you don't have to be on a board. There, you can see on the left-hand side, there's actually an index. There's also a search bar where you can search anything that has to do with the laws dealing with HOAs. And this is provided by the Adams Sterling Law Professional Law Corporation, but it's a really good website. So a lot of times if I have questions, I'll actually refer to this. I've talked to other condo specialists, like there are companies out there that will actually that will actually do an evaluation of an HOA for you for a fee. It's kind of like an inspection report. And I've talked to people and everybody refers me to this site and says this is a great resource. So if you have any questions about an HOA, this would be a great, this is a really great resource. They provided a video library, they have seminars, they have a whole bunch of, they have a newsletter that comes out. I can't remember if it's every week or every month, but they do have a newsletter that I subscribe to, and they call out all the different issues, potential issues that can be out there. And with that, I'd just like to thank you all for joining us this evening. And I hope that this has been helpful to you. If you do have any further questions, feel free to reach out to me. Again, if you have any legal issues, again, feel free to reach out to me and I'll refer you to the right people. But I do hope that if you live in an HOA, that this helped. If you're thinking about buying or selling, again, that would be a helpful thing for you to be able to evaluate and make sure that you enjoy your investment. So thank you very much and have a wonderful rest of your evening. Bye-bye.